JB Chemicals and Pharmaceuticals, because that stock is also doing okay. It was a good performance coming in from the company, especially when you look at the India business, which reported what, a 17% growth, and even the margin is something that the company managed to maintain. Let's speak with Mr. Nikhil Chopra, the CEO and whole-time director at the company, to talk to us about just that. Nikhil, hi, thanks so much for making time speaking with ET now. Let's begin by the India operations itself. 17% growth. Two-part question. A, is this kind of growth rate sustainable? And secondly, if you can break it down for us in terms of volume versus value that we have seen in India business.
First of all, thank you for inviting me on the show, ET now. It was a good quarter that we reported. Quarter one overall revenue that we could generate was close to 896 crores, that is shying away 900 crores, and India contributed almost 55% of the revenue. And if you look at what from a growth of India perspective, we could generate 17% growth. And overall, when you look at the way we have demonstrated things in India, we will continue to beat the market performance. That is what I can say. India pharma market has been growing at around 8-9% monthly, and we should be growing around 300 to 400 bips better than the market. If you ask for the breakup of volume and value, the volume growth for us was around 8-9%. Price growth was around 5-6%, and new product contribution was around 2-3%. Whereas India pharma market, the volume growth is almost flat. So almost we are growing at around 8 to 9% volume growth. And this entire growth also is backed up by some good work that we have been doing in the field of chronic therapy. Our chronic portfolio has been handsomely growing at high teens, particularly in the world of hypertension, heart failure, and lipid lowering agents.
No wonder, because those things are finding a very large market. Those chronic therapies are finding a very large market in India. Very unfortunate though. But I want to understand, what levers are you pressing that your margins are improving at such a high clip, almost 300 basis points this quarter?
So if you look at, there are 3-4 levers which are helping us in terms of the gross margin and EBITDA margins. Our gross margins overall were close to around 66%, and operating EBITDA margins, as what has been demonstrated on the screen, was 27%. That is firstly the entire mix of products that we have been selling, and what I spoke earlier about what we are trying to do in India, improve our chronic portfolio share, which is today close to 55%, which a couple of years ago was close to 47%. That is helping us. Equally, in our international operations, our entire branded generic portfolio and our CDMO part of the portfolio is also giving us better gross margins as well as EBITDA margins. And overall, from a perspective of we continue to drive the entire efficiency angle across company, whether it is in manufacturing or productivity in the field, that is overall helping us in terms of where we stand from gross margins and EBITDA margins.
I think that's the reason that you have guided for 65 to 66% in terms of the gross margins and 25 to 27% on the EBITDA margin front as well. But Nikhil, I also wanted to get a sense from you, coming back to the point that we were, started the conversation with. CMO plus India, I think right now contributes almost 60-65% of your business. What's the target to increase it further? Because I understand that this is one of those lucrative markets that you are talking about.
Yeah. So India today is contributing around 54-55%, and CDMO is contributing close to 12%. In both the parts of the business, the way we are looking at this contribution in next couple of years should be close to around 75 to 80%. That is what we are thinking. That is the way we would like to take the business ahead. And within India, what I shared earlier, the chronic part of the portfolio we want to take it to, the contribution should be around close to 60%. Also, a couple of minutes, I would like to speak about what we are trying to do in the world of CDMO business, where a lot of developmental work is happening, a lot of new drug delivery, more for the consumers. This entire business of CDMO we do outside India, where we are looking at newer forms of delivery of drugs, as what we are pioneer in the world of lozenges. There also we are looking at new therapeutic options. We are looking at new partners. We are looking at new therapeutic options within lozenges. That is also what we are trying to do. So India, around 60%, and CDMO close to around 15 to 18%. That should take us to around 75 to 80% in next couple of years.
So, Mr. Chopra, by doing all these elements and strategy in place, are you confident that for the next 3 years, 3 to 4 years, 20% kind of a growth as far as your net profit is concerned is entirely possible or highly achievable?
See, when you look at entire growth angle from a perspective of, I would like to break it into two parts. India, I expect market to grow at around 8 to 12%. We always look at that. We should beat the market performance. As if you look at the IMS figures for the month of July, also the market growth is 6%, and we are growing at 11%. So we always should be beating the market by 300 to 400 bips. International market, if I have to talk about the levers which are there for CDMO, branded generic business, there we see opportunity. South Africa is a market. We have taken a cautious call not to participate in a big way in public tender market because their margins are not healthy. So there, this year will not be a year of growth, but this will be the year of transformation where we are looking at newer opportunities, what we can do in the private market. So we should be around double-digit growth, touching double-digit growth in our international market. So overall, I think we should be close to mid-teens. That is what I can project. But the story for JB ahead is in terms of how do we maintain the traction in healthy EBITDA margins, better gross margins, continue to invest in business, look at newer opportunities in terms of incremental innovation, new drug delivery. That is what we want to do. And basically, we want to build an organization which is future ready, which is more progressive in nature, which is agile in terms of the changing environment in the healthcare sector, and how do we need and how do we serve the purpose in terms of serving more and more number of patients.
Sure, Mr. Chopra. On that note, we'll let you go. Thank you so much for joining us. So maintaining the thought about mid-teen kind of growth that they're looking, but ensuring profitable growth is what they are targeting.